The number one rule is this: in an inflationary world, you don't want to hold cash. Cash loses value. You also don't want to be stuck in a fixed income like a salary that gets a 2% raise when inflation is 5%. What you want to own are assets, specifically assets whose value and income rise with or even faster than inflation. We're now recognizing the patterns that there are economic seasons just like there are regular seasons. And I should be just as equally confident that after summer comes fall, and after fall comes winter, and after winter comes spring, as I am in the economic seasons. That low interest rates creates times of economic growth, and during times of economic growth, people tend to spend more money. And we don't see people spend less money until we reach the peak, because normally the Fed will start increasing interest rates so that we don't go into hyperinflation. And as the Fed increases interest rates, the economy slows down. And as the economy slows down, we recognize that we go into a recession. And then if you go into too deep of a recession, it becomes a depression. But the Fed will generally lower the interest rates before we go into a depression. And that is the seesaw that we go through. So we go from economic growth to a peak, to a recession, to a trough, back to economic growth. And there it just goes up and down and up and down. And so once that clicked for me, everything changed. The chaos wasn't chaos anymore. It was the reordering of the financial world. And I was going to be on the right side of it.